Hey traders, Jason here from Leavitt Brothers. Happy Tuesday. Today I'm going to talk about how I use MACD to trade. My style is simple, just a couple indicators and a few moving averages. I identify the best stocks and the best groups, and then I look at them on multiple time frames. My plan ultimately is to create an online course that pulls together everything I do. I guess you consider this a little nugget, but of course a course would go into much more detail. So let's look at a few examples. All right, so here's WMB. What I see here is this is what I look at. I have a positive divergence here. Then I have an MACD cross at a low level. While the MACD is trending up and still in moving in positive territory, you get one more dip from the stock. And to me, I love that. That's perfect. And what happens is you get like a little kiss right here, and then the stochastic crosses right here. That's my kiss and cross trade. So you get a positive divergence, cross, one more dip while the MACD stays positive, and that gives you your trade. Let's zoom in with the hourly. So when I see this on the daily chart, I'll zoom in with the hourly, and I'll look for an entry. So here's the hourly. And the blue line is the 50 period moving average. So here's a sequence that plays out pretty often when a stock is basing. Oftentimes the stock will trade above and below moving average, and then it will find support at the moving average. And when it finds support, that's your signal that the base has completely formed and the stock is ready to move. So you can see here the stock is below the moving average, above the moving average, below the moving average, above the moving average, and then right here it finds support, and that's your clue that the tide is about to turn. Okay, so we don't have to guess. We could just let the indicators guide us, and then and then of course it moves on. So even if you get in here at 23, a little bit of mid 23s, you get a move up to the 25, you get a 2-point trade. That's not too bad. So again, another example. Here's Caterpillar. So let's see here. You get a positive divergence here. Okay, you get MACD crosses at a pretty decent level there. Then the stock pops up and then pauses and then obviously continues on. You can see this candle right here. It's a gap up. That's pretty common, and if you want to trade this setup, you're going to have to get comfortable trading after a gap up, because a lot of times you get a nice divergence and then the stock pops out of its bottom. It'll rest for 3, 4, 5 days and then it continues on. So if you're the type of person who demands that the gap be filled, you're going to miss a lot of trades. Okay, but that doesn't mean you're going to be chasing stocks higher. Let's zoom in with the hourly and see what it looks like. So here's the hourly. Once again, we get stock below the moving average, above the moving average, below the moving average, above the moving average, comes down, finds support at the moving average, it pops up, and then it gaps up again. Okay, so this one is tough to trade because you got 2 consecutive gap ups. Doesn't often happen like that. But again, this is the sequence that I would look for. As a stock bases, you get a positive divergence, pops off the bottom. When it finds support at a moving average, that's your sign that the base has been completely formed and the stock is ready to trend up. Here is COG. Okay, you got positive divergence, cross at a low level. Then you have the stock pauses here and then pauses at a slightly higher level, and then it moves up a couple of points. So let's zoom in with the hourly and see what we see. All right, so you got resistance at the moving average, comes down, it gets above the moving average, gets below the moving average, gets above the moving average, and then here it finds support at the moving average and eventually moves up. Okay, so this is a sequence I look for. Stock moves above and below moving average on an intraday chart, and then it finds support there. That's my clue that the base has been completely formed and the stock is ready to start moving. Okay, so again, you get the signal from the daily chart. The daily chart kind of clues me in that something's, that there's a trade going to happen here, and then I zoom in with an intraday chart to find an entry. Here's Wi-Fi. Similar thing here. I hope you guys are getting bored, because if you want to get good at this, you're going to look at like hundreds and hundreds of charts. You're going to build yourself a chart library. You're going to reverse engineer the charts and see what the similarities are between them. This is what I do. This is what I've done over the years to teach myself how to trade. I'll pull these charts and then I'll zoom in and I'll like reverse engineer them and see similarities. And you look at enough charts, you start to see patterns and stuff. So here we got positive divergence, cross at a low level, and then right here you get a little like ascending triangle pattern that forms, and then the stock pops out to the upside. Okay, so let's zoom in. Here's the hourly chart. So obviously resistance is here, resistance is here, you get support here, and then you get support here. Okay, so on the daily chart, you're getting a positive divergence here. Then you get this big move up that causes the MACD to cross. You come down here, you get 2 tests on the moving average, which are great entries. One more test here if you want to add to it, or if you miss the first one, this is your chance to enter. And then you get a nice move up. So if you're entering over here, you're getting a move from like 12 up into the 13, 14 area. If you got in over here, you're getting a move from like the mid 12s to 14. Either way, you're getting a really nice move for a pretty smooth moving stock. All right, TROX, positive divergence, cross at a low level. The stock pauses here for 3-4 days, and then boom, it takes off. Zooming in, stock gets rejected by the moving average, gets above it, comes back down, finds support, and then takes off. Okay, stock moves from like 7 up to mid 9s. It's a great trade for a cheap stock. All right, last one. COMM, positive divergence, cross a low level, or relatively low level. Okay, you got a pause here for a few days. You also have like a resistance line that could be drawn here. So a lot of great things happen here. Weak stock falls, you get a positive divergence. Stock pops up, big day here. You get a cross on the MACD. Stock pauses for long enough to allow the stock to rest, restore its energy. MACD continues to trend up. You get a resistance line that forms. Like the sequence here is perfect, and then you get a breakout, and the stock goes from 11 to 13. Really, really, really nice overall setup. Zooming in. So obviously you got resistance here, stock gets above, comes back down, a little sloppy there, but finds support here and then goes. I mean, that's beautiful to have that sequence play out on the daily chart, and then to zoom in on the hourly chart and see, resistance here, get above the moving average, come down and test it, and then go up. I mean, that is as good as you can get for a trade from the mid 10s up to 13. That's fantastic. All right, thanks for listening. If you like the video, give it a like, share it with your trading friends. You can also subscribe to the channel right here at YouTube and be alerted of new content when it's posted. All right, see you next time.